I'm Priscilla Barrera with the Investing News Network, and here with me today is Jim Lennon, Managing Director of Red Door Research. Jim, thank you so much for joining us today.
Pleasure to be here.
All right, so we're here at the Cathodes conference where you were part of a panel discussing nickel and cobalt. What is your main takeaway from the discussion?
Well, I think that when you come to these types of conferences, you're certainly going to go away bullish about demand. It's certainly reinforced to me that there is a very solid growth path for electric vehicles, especially in the 2020s. I mean, I think we're still in the early stages of that development. You also come away with a question mark about where the supply is going to come from, whether it's cobalt or nickel or lithium. And it's more complicated than it first seems, but certainly for lithium and cobalt, it does look as though in the short run it's quite well balanced, if not oversupplied. For nickel, it's been oversupplied for a number of years. But in all cases, if the solid growth that we see in electric vehicles continues into the 2020s, then all those industries are going to be challenged to meet demand.
All right, and then talking specifically about the nickel market, has the market performed as you expected at the end of last year? Were there any surprises?
I think the supply-demand balance has been more or less as we expected. In other words, demand was very, very strong, especially through the first 6 months of this year. And supply has been weak in terms of growth, and the market has been in a large deficit between supply and demand. What has surprised me is that prices since the middle of the year have fallen quite sharply, 15 to 20%. And that seems to reflect global economic fears, especially around Chinese growth and also around the trade war between the US and China. So that really came as a bit of a surprise. It looked at the start of the year as though we were in this synchronized global growth picture. Now, where we sit today, there's a lot of concerns about slowing economic growth.
Right. And what is your outlook for overall nickel demand, and maybe in particular from the battery sector going forward? Will the battery sector really be a significant portion of the overall demand for nickel?
It definitely will be. At the moment, batteries are only about 4 or 5% of total demand, so quite inconsequential in the overall scheme of things. It's still going to be driven by the stainless steel sector, which is 70% of demand. However, nickel in batteries is probably growing at 30% compound average growth rate, because not only is it growing in line with electric vehicle sales, it's also growing because the amount of nickel going in the battery is getting bigger and bigger, partly to replace cobalt, partly to increase the range of the vehicles. Stainless steel will continue to be a major growth area, but what we now have is 2 major growth drivers for nickel batteries and stainless steel. So that's a huge challenge for the supply side of the industry.
Right. And, well, talking then in terms of supply, what do you think have been the major challenges this year in the nickel sector?
Well, not enough supply is the major challenge. We've seen LME and Shanghai inventories fall by almost 170,000 tonnes so far this year, which is equivalent to over 7% of consumption. So that's a huge reliance on inventory destocking. What we do see is that the traditional nickel producers, the Vales, the Norilsks, Glencores, BHPs, etc., their production is either static or declining because of underinvestment over the last 5 to 7 years. Most of the growth is now coming from Indonesia, from Chinese investors in Indonesia in the form of a nickel pig iron, which at the moment is not suitable for the battery market. So it's meeting the demand from the stainless steel sector. So the challenge for the industry is that they are seeing their market share eroded by Chinese investment.
Right. So are there any nickel projects you like right now, or that investors maybe should keep an eye out for? Or where do you see all the nickel needed for batteries coming from?
Okay. Well, I think that most of the growth in nickel supply is now coming from Chinese investment in Indonesia. They are all non-listed private entities, either state-owned entities or private entities. So it's very hard to get exposure via that route. What we do see is that will be the major source of growth. I would think over 70% of the growth in nickel demand over the next decade is going to be coming from that type of investment. We still think that nickel prices can move higher in that environment, you get exposure through any nickel producer. Once again, it's a slightly unfortunate fact that the major players are part of big global entities like BHP, Glencore, Vale, and where nickel earnings don't really impact on the share price. Norilsk or Nornickel is probably the biggest exposure out of Russia, which also has concerns for US investors in terms of exposure to a Russian listed name, but they are very well leveraged to the nickel market. In Australia, we're looking at some of the smaller miners, Western Areas, Independence Group, those sort of companies, because once again, they're pure plays in the nickel space.
Right. And in terms of prices then, have prices performed as you expected at the end of last year?
As I said earlier, prices have risen since the start of the year, but they've given up a lot of their gains in the last 3 or 4 months. So I didn't expect that. I was expecting prices to keep their progress up towards $15,000, $16,000. Instead, they're now around about $12,500 a tonne. To the extent that is driven by fear of a slowdown, if the slowdown doesn't eventuate, then certainly we could see quite a bit of catch-up take place over the next 6 to 9 months. But as I said, at the moment, there's a lot of uncertainty regarding the global economic climate.
All right, and I've heard some market watchers suggest that we might see 2 different prices for nickel in the future. What are your thoughts?
I don't agree with that. I think that most nickel can be converted into a nickel form suitable to make batteries. There's different costs associated with converting the different types of nickel, and to that extent, there will be a premium for example, nickel sulfate, which is a product of transforming primary nickel into a form suitable for the battery industry. But this is what we've been used to for forever, 100 years in the nickel market. There's different prices for different products, whether it's plating grade, ferronickel, nickel pig iron. So I don't see anything abnormal. I think that all forms of nickel can be switched between different applications, given a bit of technology and a bit of money.
All right. And my final question for you today, looking at the nickel supply-demand dynamics, and also from the battery sector, what would you say investors should pay attention to? Are there any factors that could derail the nickel story?
I think that in the short run, the major factor that I would be looking at would be Chinese growth trends. We definitely see the Chinese government re-engaging on a deleveraging policy as far as their economy is concerned to reduce debt. Any signs that they are abandoning that to stimulate domestic growth, to stimulate housing market, infrastructure spending, etc., should be watched. I mean, this is exactly what happened at the end of 2015, early 16. It looked as though China was headed south. Then they stepped in and aggressively stimulated their economy, and that led to metal prices taking off very, very strongly. At the moment, politically, it looks like they're going to hold the course, and they're not going to stimulate too aggressively. So I think that's something to watch.
All right, Jim, thank you so much for joining us today.
Okay, thank you very much.